If you're a home builder, honestly, now would probably be a great time to do these things for your business before it is too late, because there are reports and there are a record amount of potential buyers backing out of new construction, home build contracts in neighborhoods similar to the one like you see here behind me with all these new construction builds, and buyers are backing out. The interest rates have gone up. People's income is being reduced. Their safety and security of their job, the ability to even make it through underwriting and get a clear to close and still be employed by the time these homes are finished with, I don't know, how many supply chain disruptions stand in the way of being completed on time and getting that CO, certificate of occupancy, to actually close. And we're seeing it in across the country, particularly just recently, reports of Denver, Colorado, and Boise, Idaho. These are coming from major real estate companies in the know, in the market. Redfin, Zillow, also the same companies that are seeing huge layoffs and mass layoffs and firing and hiring freezes and record losses hitting their books. And I gotta say, look at the price of lumber. Just look at the price of lumber and see where we are today from where we were 12 months ago. And all of this is actually having a negative impact on the housing market. We are probably not quite where we're going to really see half price houses just yet. But with recent claims and projected predictions of half price homes hitting the market, it's somewhat of a realistic possibility, much like what we talked about earlier. Well, gas prices have come down. Well, granted, they've come down. They're still higher than they were, but they're lower than the high that they had gone to. So if we look at it from that point, and real estate has taken a 30 to 40% increase in prices and values and appraisals and closing, what they actually close for, with record amounts of buyers out there in bidding wars, bidding and paying over asking, waiving appraisal contingencies, all cash buyers that didn't care about financing. They paid that high price, they paid that premium, and if they're forced to sell, then we could possibly see a half price home situation on these recently inflated prices. We'll have to wait and see if how that works out, which honestly, if that were to be the case, I'd expect to see that probably early 2023 into the spring selling season of 2023, when if the housing market is still on that downward spiral and decline, that's going to be a time to make hay, honestly, really and truly. But the writing's on the wall. And between the reports that are out there of potential buyers under contract, either backing out, losing their deposits, walking away from possible escrow or anything like that, we're also seeing the banks and the mortgage lenders getting aggressive and lowering the mortgage rates, despite the fact that the Fed and Jerome Powell are raising interest rates. We just saw another increase, 75 basis points of the interest rates just the other day by Jerome Powell and the Fed. Meanwhile, home mortgage rates are going down. That's because the higher rates imposed by the Fed to curb inflation are also deterring buyers and making it so that buyers are less, they're unable to afford as much home as they once were, based on the higher interest rate and how it relates to their debt to income, on top of the inflated price through inflation and just all the added costs that we've experienced through the pandemic and post-pandemic recovery have all taken a hit on the buyer pool. So as builders are continuously trying to meet and exceed demand with their supply, because we got a ton of houses going up here, they're also getting kind of kicked at the same time by all these other outside influences that are making it more difficult for them to sell the completed projects. And unfortunately, as a home builder, if you're getting into these properties under the circumstance and expectation of yesterday's price, in addition to yesterday's cost, you're going to be upside down on these properties when it comes time to sell them. And at ultimately, we're going to see developed neighborhoods, because before there were, and we'll probably start seeing some more developments go under that they're like completely finished neighborhood streets, curb, gutter, sewer laterals are in, and storm is done, detention ponds are done, everything's done, just no houses. We'll probably start seeing some more of those rolling around as investors are backing out early before they get in too deep. But on a neighborhood like this, if things go sideways, all these homes here could go, basically they could be foreclosed on by the bank that lent the money for the builder to build these properties. And then we'll start seeing some distressed properties on the market, which will be a very interesting situation, because then a new builder is going to have to come in pennies on the dollar to pick these up and try to finish this project that they didn't start. It's a whole nother can of worms. We can get into that into another video. But for the builders, the home builders that are footing the bill, that have signed on the dotted line, that carry the responsibility and the liabilities for these going up, you guys might want to really pay attention to what's going on out there in the market, especially as more than likely the delayed timelines of getting these projects done. In addition to, there's going to be a huge strain on supplies, as we're seeing a record number of natural disasters hitting homes, especially in Eastern Kentucky, St. Louis, that are they're gonna put a dent on the labor force and the availability of the products needed that are already stretched thin because of the pandemic, and a lot of these things being stuck on shipping containers, now probably stuck on rail cars, and these railroads that are potentially going on strike possibly in September. And the higher cost, the longer time for completion, and these having an impact on your cash flow could potentially put these builders in a bind where they go under, they go bankrupt before they can even sell them. They're sitting on a gold mine here, but if they can't make it till payday and they go under, then they're completely screwed. And if you're a home builder and this is you, and you're in this situation, and you're looking at your balance sheet, and you're saying, hey man, we're getting kind of thin, we're getting kind of tight, and all your credit lines and all your lenders and everybody's like, hey, look, we can't give you any more money. These houses probably aren't going to appraise anyway as it is. What are you going to do? Because if you've got any personal guarantee tied to these, if you got any bonds or anything, payment and performance bonds tied to these, when this goes under, when it goes belly up, when buyers back out, when prices get cut, get slashed, and we really start to see these half-price homes as a realistic possibility, if you're holding the bag, then that's going to come to you, your front door, your family, your personal wealth, your personal finances, your savings, anything that you've got, they're going to come get. So a home buyer right now needs to be preparing themselves to get wiped out, hoping that they don't. But if you're not prepared for it and it happens, I mean, it's going to be a tough time. But at the same time, for those on the outside looking in, and you're looking to get a chance to invest in some real estate, then you might want to pay attention to these new builds, these new constructions, these new neighborhoods being developed, anything that's breaking ground, and really pay attention to what's going on, because it could be a great investment opportunity for those who are prepared for it.